Welcome, everyone. My name is Kate Mosley, and I'm the program manager for the Renew America's Schools, which is a program of the state and community energy programs within the Department of Energy. Glad to have you on with us today. We are going to explore and go deeper on IRA tax credits for schools, and this is a follow-up to the overview provided in the Beyond Grants webinar that we hosted earlier this month. Now, regardless of whether you were on that webinar, we are looking forward to sharing more information about the tax credits from the Inflation Reduction Act, also known as IRA or IRA, which I'm sure most of you, if not all, are familiar. I wish to inform you that this WebEx call is being recorded and may be posted on DOE's website or used internally afterwards. If you do not wish to have your voice recorded at this time, please do not speak during the call. If you do not wish to have your image recorded, please turn off your camera now or participate by phone. If you speak during the call or use video connection, you are presumed consent to recording and use of your voice or image. Speaking and video are disabled through this platform, but we encourage you to put questions in the chat throughout the webinar. The Renew America Schools program at the Department of Energy is a new program with $500 million in funding for energy improvements at public school facilities across the country. You can see the details on the slide here of eligible energy improvements and entities through our grants. The second round of funding from this program is open for applications now. The 2024 Renew America School Prize will provide $180 million across 3 phases. First phase will be a prize, followed by a 2-phase cooperative agreement for energy audits and implementation of those improvements. This award includes a $300,000 prize up front, which helps you with some planning and projections. Then it's followed by anywhere from $7.5 million to up to $15 million in funding, depending upon the number of schools in your portfolio. So we encourage you to apply on HeroX by June 13th, 2024. The deadline is June 13th, 2024, so mark your calendars. And my colleague here will put the link in the chat so that you can learn more after our webinar today. We are so pleased to have some great guest speakers presenting on this webinar today. We'll hear first from a staff member at Loudoun County School District, and then we're going to go deeper into the tax credits with the experts we have here. And then we'll wrap up with some resources and important announcements to close us out. As I said earlier, I'm Kate Mosley, and I'm with the Department of Energy as the program manager for the Schools and Nonprofits program. We're also joined here by Sarah Ross, representing UndauntedK12, and Anissa Hemming with Center for Green Schools. In a moment, I'll speak with Clark Seipt from Loudoun County Public Schools to give insight into what it's like actually from a district's perspective, working on elective pay projects right now. And then we're going to hear from Colette, Jacob, Michael, and Jesse from tax firms. So let's turn now to what I think is a great example of what is possible for a school district. Meet Clark Seipt, the Director of Sustainability at Loudoun County Public Schools in Virginia. Clark, tell us about your particular role within your school district and also about the partnerships that you have pursued and brought together for the projects that you're working on.
Absolutely. Thank you, Kate, and thank you to everyone that's joining us today. We're delighted to be here. I'm the new Director of Sustainability for Loudoun County Public Schools. You can see here on our first slide that my office was created and opened up in December of 2023. So prime time to really be part of these conversations. Wanted to give you just a little bit of insight into LCPS before we dive in. Just some quick stats here. As you can see, we are a very large public K-12 school system in Virginia. We span from teeny tiny elementary schools with less than 100 students out in horse country of Virginia, about an hour and a half west of Washington, D.C., all the way to massive high schools. We're currently in the design stage of 2 new high schools that are each 350,000 square feet, smack dab in the middle of really dense suburban neighborhoods. So as you can see, we have a lot to care for here, and we want to make sure that we're making really wise choices and modeling what we teach. We're also Data Center Alley here in Virginia, with over 30 million square feet of operational data centers and 5 million more data centers in plans. And so our energy context here is quite complex, and that certainly creates an interesting environment in which to operate. Let's go to the next slide, Annabelle. Coming in new, I really have this excellent honor of building on a long history of energy conservation and efficiency here in the county. You can see some of our cumulative achievements here that we are really proud of, and I specifically want to call out to you our energy savings performance contract. That is held currently with CMTA, and they have been a wonderful partner, and we have found this to be just an invaluable vehicle for supporting a lot of the energy improvements, the efficiency improvements that we've been able to put into place in recent years. A lot of what you see here, the ACMs in 49 schools, about 90% of our solar installation have gone in the last several years. All of that happened, through this partnership with CMTA as part of our contract. And that's really where conversations around IRA tax credits began for us as well. That takes me to the first of 3 messages, if we can go to the next slide, that I really want to impart to you today. And Kate, that first one is around partnerships. I think it is absolutely critical for all of us to recognize and to take a breath and pause in that recognition that understanding these tax credits is absolutely a partnership effort. I indicated just a minute ago that, our conversations really began with our ESCO. They were one of the very first proponents in our conversations around, hey, this is coming. We don't know the full depth and breadth of it yet, but it's coming. We need to take note. This is something that's going to be an opportunity for you. So we started initial conversations with them. They helped us in some of our early calculations. And I was able to take that baseline understanding with me to the Green Schools Conference in Santa Fe earlier this year, where I interacted with many of the folks and organizations that are represented here on this call. It was there that we really started to understand the full spectrum of what might be available to us through this. We had been talking about this through the lens of our solar, but it's not just solar. It's not just ground source heat pumps. It's also transportation, your electric vehicles, the charging infrastructure that's associated with those vehicles. And so really starting to talk with partners at that conference and able to bring back the knowledge gained there allowed us here in our district to pull together a small core team of folks. It wasn't just facilities operations. We brought in transportation. We brought in finance. We talked with other school districts. As a local government entity, we had to talk with the county too. And we were really able to create some awareness in them of the opportunity that truly sits before all of us. And most recently, we've brought in an external auditor. Having the right partners at the table is absolutely critical. And it also should be a comfort to us, because I think what it means when you really approach this as a partnership effort, it reminds you that me, Clark Seipt, Director of Sustainability, I don't have to know every single detail. I don't have to have the exact right answer to every question, because when you bring together the right partners, you explore all of these issues that are going to arise together, and you get to a place where you really feel like you can navigate this with success.
Clark, can you share some about how your leadership then took this information and has approached these partnerships alongside you?
Absolutely. That actually is a wonderful segue to the next slide if we could look at it. I think a huge part of how our leadership has approached it is through continuing to communicate with one another and to ask questions. We meet regularly around this year's filing, right? We're all in that time period where we're ready to just go after this. We're pre-registering soon. We know that we're going to file soon. And I will tell you, our leadership putting their heads together has really transformed what, had we really gone after this months ago versus taking the time to truly get to a place where we understood it with this team that's been gathered around the table, I think our filing would look very, very different than it does now. We had to work with each other to get clear on those eligible technologies and what the conditions and requirements really were. Our executive director of finance has been joining webinars just like this. Our leadership has been coming together, rolling up their sleeves. She may even be on this call right now, right? To really understand it, because we recognize that we cannot be hesitant to ask questions. All of us are figuring this out. So you kind of put your expertise aside and you say, let's put our heads together. Let's combine our perspectives, combine our experience, and really figure this out. You see the note here in the yellow box. I mean, that was one of the things that came out. We started to think about transportation, and then my director of transportation, he was all in, and then there was this pause because it said, well, wait, we got EPA credits, right? We got EPA rebates for these 16 electric buses that we're talking about. Does that knock us out of being eligible? And it doesn't, right? We just had to better understand what that meant for us. And again, now all of that is included in our filing for this year.
Can you share some about the kind of projects you're submitting for tax credits this next round?
Absolutely. Absolutely. We have solar installations that are part of our filing for this current year. We also have, as I said, 16 electric buses. We have a couple of new electric vehicles that have been added to our white fleet as part of this as well. And we are using this year's filing as a pilot, right? And that's my third message, because here's what we also need to understand. This opportunity is ours. You guys are going to hear from several experts later on in this call, Jacob Goldman being one of them. And I will never forget, and Annabelle, I know she's going to smile on this because she was in the same session. Jacob is like the Oprah of tax professionals. He's going to tell you tax credit for you and a tax credit for you, because this is absolutely accurate. The opportunity is out there for each and every one of our districts. You have to figure out your process, and then you need to look ahead. So we are figuring out our process right now with these solar installations, with our electric buses, right? And a little bit of charging infrastructure alongside them. We're doing our initial filing. And by way of doing this, we're figuring out what that process looks like for us. How are we interacting with our county? What does it mean with this team that we've gathered together? Let's get this initial filing under our belt, because there's more coming. We already have 2 ground source heat pump systems under construction. They will be part of filings in future years. I mentioned we have these massive high schools in design. What do we need to be thinking about looking to the coming years, the projects that we know are on our dockets? We all do our capital planning for years in advance, right? What do we need to be thinking about now? What do we need to be figuring out now so that we are primed and ready to take advantage of these opportunities for years to come? And don't forget about retrofits. Don't forget about critical system replacements. All of those are opportunities for you to take advantage of this opportunity that's out there. And don't forget about leveraging funds. Kate spoke briefly about Renew America's Schools, just as an example. That is a program that is available to you right now that is encouraging us as K-12 systems to leverage these funds, right? Think about your rebates. Think about the different grants that are out there. Put together a portfolio of work and a portfolio of funding opportunities that allow you to get this really important work done in a way that makes it a no-brainer for your district and the people that depend on you.
You're really doing big work. Do you know yet what your impact is? Do you
With
have
the
some of
tax
that
credits?
information to share with us?
With the tax credit specifically, we do. We've just done some preliminary calculations with our external auditors. With this initial filing, we're expecting right at $2 million to be returned as tax credits. And then over the next 2 years, I told you about the stuff that's already in the pipeline, we're expecting at least $7 to $8 million in tax credits in the next 2 fiscal years. So the money is out there, the opportunity is real, and it is not insignificant. So take a breath, right? Pull together your team, make sure that you're not hesitant to ask questions, and figure out your plan, because it's worth it. This is incredibly important work, and it's an exciting time to be part of it.
You make it sound so possible. So thank you, Clark, for county's lead on this effort and showing us that a way is possible. Sarah?
Thank you, Clark. That was just awesome. So thank you to both you and Kate for starting us off here. And thanks to all of you in the audience for joining us. You know, you all are here for more on the IRA tax credits because you know what a monumental opportunity this is for our schools to improve and safeguard student health and learning, to reduce costs, to build resilience in our communities, and to mitigate the impact our schools have on climate change. So we will be going deeper on these non-competitive, unlimited tax credits, Annabelle, you can go forward, for these clean energy technologies that are available today. Next slide, Annabelle. And in particular, we'll be digging deeper on 3 of the cross-cutting provisions that the Inflation Reduction Act contains. So this piece of legislation really seeks to speed this country's transition to clean energy. Next slide, Annabelle. And in the process, it also aims to create good family-sustaining jobs. It wants to advance equity by investing extra dollars in the communities that need it most. And it aims to stimulate domestic manufacturing so that America is leading in this massive global wealth creation opportunity that is the clean energy transition. Next slide. Okay, so here's your fair warning. This is an advanced session. If you are brand new to IRA tax credits, the rest of this session might sound like a foreign language to you. We would highly encourage you to go back and watch the first part of this 2-part series, which introduced these concepts to a beginner audience. So we have that there for you. And we want to say we know there's a lot to learn here. So following on Clark's advice, we strongly encourage you to bring others in your district into this work, other partners outside of your district. We have a 2-page overview here that you can download and use to start that conversation. We know that this is new and unfamiliar territory for districts. And so as we start the conversation with our experts, I want to offer you all a metaphor. Our speakers today are like the professional chefs, right? They have worked with these ingredients for many years. They have worked with many clients to produce excellent results in these areas. So you do not have to be, and no one should expect you to be, the IRA professional overnight and on your own. I think this is very consistent with Clark's message. If you are cooking up a simple dish, right? So maybe you've got one small solar installation. Maybe you're a strong amateur chef and you take that one on your own. But if, like Clark, you have an extensive set of clean energy technologies on the menu, you could likely use some help. And don't wait until the guests are already seated at the table, right? All your stakeholders are there waiting to be served, right? Get help in early so you plan the menu together. You get your ingredients prepped and then everything can proceed smoothly, right? But most of all, don't let your lack of familiarity with these ingredients, which again is new to all of us, keep your students and your district from missing out on this next decade really of transformation to cleaner, more efficient, more resilient schools. So there's my pitch. All right, next slide, Annabelle. We're going to get cooking here with our first professional chef here, Colette. So Colette, let's dig in on dates. We want to lay the foundation here and really start to help folks understand how this process will unfold at a high level. So we have 3 date concepts that are kind of laid out here, and we're going to go through each of them one by one. And thank you for being here, by the way. The first date I want to talk about is this concept of commence construction. That is a term of art. Why is that date important? And what are some of the nuances around that concept?
Of course, thanks for having me here today. So much like Clark mentioned, it's developing that process and building out your timeline and understanding is a huge part of really being able to achieve these incentives. So commencing construction is super important. It's our stake in the sand. It defines what rules apply to us, if there are any safe harbors, exceptions, certain labor thresholds, and provisions. And so really understanding what beginning of construction looks like from a tax code perspective is huge in understanding what are your requirements to achieve these increased credit amounts.
And so some of the nuance there, let's say I have a new school construction project and a solar project, what is my commence construction there?
So you're going to be looking at when your energy project is getting started. And so that's kind of where mapping out the construction is really important. Understanding, what what thresholds have to be met to actually truly begin construction. It might not be necessarily physical construction of that energy property. It could be purchasing some of the equipment in advance as well. And so that is one thing just to consider. Understanding construction timeline of the energy property itself in connection to when you actually start is super important to understanding which rules apply.
Okay, so let's move to placed in service, another kind of term of art that folks will hear very often in this work. Why is this date important? What does it do for us?
Of course, so commencing construction, that gives you your rules. Placed in service is when you're actually able to go and register with the IRS and then file for, and eventually file for these credits. So you're not able to file for these in advance. These are tax credits. And so investment credits, you've got to spend the money to then get that back. So placed in service is huge to work towards getting that rebate back.
Great. Great. Okay. And then how does the school's fiscal year kind of impact its deadlines with the IRS?
Of course. So these are structured as tax credits, and we file our taxes after our fiscal or accounting period year end, typically. So understanding what your tax year end is, which is generally going to file your fiscal year end, is super important to when you're actually able to file for these credits. And so that's one thing that's super important. There are some nuances with 2023, but so that is one thing you definitely want to work closely with your advisors to make sure you've got the right period and you're filing at the right timeline.
Great. Okay, so let's move on to the next slide. We've got these three concepts: commence construction, place in service, and then our fiscal year. Let's put these concepts together. Do you want to kind of talk us through this slide here and help folks see how it might work for them?
Of course. All right. So this is assuming that we've got a fiscal year end of, I believe, June 30, 2024. Right. So we had some solar placed in service in October. We purchased some EV buses in February, and then we get to kind of that year end. Right now, once we place the solar in service along with those EV buses, we can go ahead and pre-register with the IRS. In order to be able to make certain elections to get your cash back, you have to have this registration ID. You can't really file for that until you place it in service. So once you have those IDs, once you have those IDs and you've commenced kind of your fiscal year end, that's when you can start looking for filing. Your initial filing is due 5.5 months after the close of the year end. So a June 30 would be that November 15th, 2024. There are some automatic extensions that give you another 6 months to file as well. Depending on the size of your project, the complexity, you might need more time. I'll note for those that are making a calendar year end for 2023, the last date to file is November 15th of 2024. But that's where kind of this timeline, understanding your dates, your relevant dates, your year end becomes super important to make sure you don't miss these filings.
Great, great. And let's talk about the pre-filing process a little bit, if we could kind of double click there. What kinds of data, what kinds of paperwork, who's doing that? What are you seeing? Help people wrap their heads around what that's going to look like for them.
Of course. So the schools are going to be the one to go and set up their account with the IRS. There's a portal. You have to verify your ID information and then general information about the school itself. In addition to more credit specific, are you filing for EV credits? Are you filing for the investment credits? Just that general information. And so that information that they're requesting, you'll need that placed in service piece of it to show that you've actually placed it in service. And so that's kind of what it looks like at this point.
Got it. And so we're uploading some key pieces of paper, like a permit or a proof of ownership, pieces like that.
Correct. So it could be just like you said, it could be the permit, it could be certain census tracts, especially when we get into our EV chargers piece of it, just some of that verification documents that you went and put solar at these specific locations, or EV chargers in specific locations, so that they can kind of get checked that you're meeting those initial requirements.
Okay. What would you say for schools, like how can they really help this process go smoothly?
Honestly, work closely with your advisors. You're working with your GCs in addition to your your energy tax credit advisors really to pull that information together so that it doesn't all just fall on you when it's time to file. A lot of this information can be gathered throughout the process. And so that way it's a little bit easier to kind of collect as you go versus waiting until the end and you're kind of scrounging to find this information.
Got it. Got it. And just to clarify, that pre-filing is not an approval necessarily. It's kind of a first step. And
Right.
then you're going to do that filing, you know, that formal filing of the kind of that primary form, the 990T. Yeah.
Of course, with direct pay, this is a new space for the IRS. And so they're really trying to try to negate fraud as much as possible. And so that's where you're getting this initial just kind of gut check of this is what we did. And so it doesn't necessarily approve it. It just kind of says, we did this, we put this in place, and we're going to be making this direct pay election as well.
Great. Great. Okay, Annabelle, we can move forward. So your firm is helping schools file for the Section 48, the Section 45W for the electric vehicles, and the 30C today, but kind of help us look ahead to what's kind of right on the horizon here in terms of the structure of these tax credits.
Of course. So because tax is never super easy, they had to go and change the rules on us 2 years in. And so 48 actually phases out. However, it moves under 48 Cap E. And so this is a clean electricity investment. Some of the equipment that qualifies under 48 phases out underneath 48E. And all it does is it really references your 48 definitions and adds a greenhouse gas requirement, or greenhouse gas can't be greater than 0 on these. And so some of the properties don't necessarily carry over, but the ones that we're seeing in schools, such as, geothermal heat pumps, that is one of the only ones that actually stays in 48 and will continue on, whereas solar energy storage move under this 48 Cap E. Electric vehicles and EV charging stations remain where they are in their sections.
Got it. Got it. And this is where the commence construction date will come in. Is that right? So like if I commence construction 2024 on a solar project, it's going to be in Section 48. If I commence construction on solar in 2025, it's going to fall under 48E. Do I have that right?
Correct.
Great. Great. Okay. See, I get to learn along the way here too. Because I'm just an amateur chef, not a professional. Okay, so let's talk about how long folks have to access these various credits, since we now know they kind of have these 4 different frameworks for them. We have a good amount of time here, Colette. Yeah, do you want to talk us through this kind of sunsets?
Of course. So like I said, a lot of the solar energy storage under 48 phase out and move to 48 Cap E. But those heat pumps, as long as we start construction by 1/1/35, we're good to go, right? Back to what I said in the beginning, commencing construction is kind of our stake in the sand as to what rules apply to us. Solar energy storage, those are extended through 2033 under the new provisions, and then along with 45W and 30C, those electric vehicles and infrastructure go through 2032. Pending any other legislative updates. So we'll see.
Great. Okay. Anissa, do we have any questions on process that you want to pop in here? Because we're going to switch gears a little bit. How we looking in the Q&A?
No, we don't have any questions yet.
Okay.
Thanks,
All right. Sounds good. Colette, any last words? We good? Anything else you want to add on that I didn't ask you about that I should have about process?
The only other thing I wanted to note on timeline is once you file, Treasury's issued a notice saying they're really trying to cut checks within 45 days. So understanding your timeline and when you're going to get that cash back is, I think it's important, but kind of understanding just your overall timeline and filing to really get it back is really important.
Great. Great. Super awesome.
We've got
Thank
lots
you.
of good questions rolling in, so let's save those for the next break.
Okay, yes, yeah.
We had to get people's brains rolling.
Got people excited there. That was exactly my point. Okay, wonderful, wonderful. All right. So thank you so much, Colette. Thank you for being here. Thanks for the work you're doing to support schools and taking advantage of this opportunity. We really appreciate it. Okay, so I'm going to set the stage here for us to dig in a little bit more on Section 48 and Section 48E, which are the ones for the ground source and the solar and the energy storage here. You know, a key to understanding the value of your credit and how to maximize that credit and to understand the actions you may be able to take to really maximize your credits is understand where you fall on this chart. So we're going to start here with the rows and the first column, and we'll kind of build this out together. So if your project is under 1 megawatt, you're going to start at this base credit of 30% to calculate your tax credit. And you will have opportunities to increase that, additional 10% off if you're located in an energy community. We'll talk more about that. An additional 10% if you use domestic content. We'll talk more about that. And an additional 10 to 20% if you compete and are allocated an additional bonus called the low income bonus adder. So that's if your energy property is under 1 megawatt. You'll notice if we go to over 1 megawatt, so these are larger forms of energy property, our base credit falls and our adders fall. And the way to get back to those higher numbers is to layer in compliance with prevailing wage and apprenticeship, the kind of labor standards that are associated again with this policy's desire to create good family sustaining jobs. So we have a strong carrot and a strong incentives. We're holding these larger projects to a higher standard here in terms of the labor standards. We'll talk more about that. So this table is really going to be, you know, part of our guide that we'll dig in more as we go forward. Next slide, Annabelle. And in particular, we're going to bring another one of our chefs here, Jacob Goldman, and we're going to talk about how you get that additional 10% energy community bonus credit and how we get that low income bonus adder. And we'll dig in on 1 megawatt and talk more about that. So Jacob, thanks for being here today. Thanks for all the work that you do. We've got 3 different maps that schools really need to consult to understand where their project location falls in this IRA world. Let's start with the energy communities bonus. This is this 10% bonus credit for ground source heat pumps, solar and wind, right? If you're in the shaded area of the country here, we have a few different shades, you get an extra 10% off these clean energy machines. What else do people need to know about this energy community bonus credit map?
Sure. And before that, you might be a amateur chef, but you can compete on Master Chef for sure. So I expect you in front of Gordon Ramsay shortly.
I'm trying.
Just to extend the
metaphor. I love
the metaphor.
Okay.
There are 3 different ways to qualify. One way is not map based at all. It's if an environmental engineer deems your location a brownfield site, that's not on this map. So if an environmental engineer deems your location a brownfield site, then you're in an energy community, you get the bonus. It's a 2% bonus or a 10% bonus, depending on where you are on the chart that you were describing just a second ago.
Great.
The other way is based on the other ways are based on your location. So one of those is the census tract or the adjoining census tract, where a coal mine was closed since 2000 or where a coal-fired plant was closed since 2010. And those are the ones in orange and tan on the map. And there's a nice link there. So for those viewers, you'll click on that link. You'll be able to zoom into those locations. If you're in an orange or a tan area, by default, you're in an energy community, you get that 2% bonus or a 10% bonus. Then there's those bluish purple areas. Those ones are going to change over time. So those are based on employment, 2 different employment items. The first is 0.17% of employment comes from coal, oil, or natural gas. And at the same time, that same location has higher than average unemployment. And DOE has mentioned that somewhere around tomorrow, give or take a couple days, this map is going to change. So every year they're going to look at employment levels and determine if an area is still blue or it disappears. So kind of to that start of construction or commence construction, if you're in one of those blue areas right this second, you would prefer to commence construction before the approximately May 31st, when the map could be updated. In addition, the current map right this second, they included some additional areas that qualify back in March. They are not reflected on this map. And so on the IRS website, you can click on a link and you can get a list. But come a couple days from now, that list will be morphed into this new map.
Okay, let's move on to the next map here, Annabelle, and move on to low-income communities. So this is the one that we can compete just for solar and wind for an additional 10% off, those type of projects. What else do folks need to know, Jacob, about this map for solar?
Yeah, so you're exactly right. You need to compete. Your project needs to be in a specific state. It has to be under contract, but not yet completed. So you have to have a contract to install the solar, but not have finished the project in order to apply. Category 1 and Category 2 are where schools are mainly going to apply. Category 1 is the green areas on the map. Category 2 are not on the map, but if you're in tribal lands, you're automatically in Category 2. And you need to be under contract, but not yet completed in order to apply. The window for application opened up yesterday. Or maybe it was 2 days ago, opened up 2 days ago, and will close, I think it's June 27th. So you need to be under contract now if you want to do the 2024 tranche of this.
Got it. Okay. Annabelle, next map, let's go to 30C, which is that tax credits for EV charging equipment. What's the big message here?
Yeah, so, this is the only incentive that not the entire country qualifies for. You have to be in the right location to qualify. So what is the right location? The right location is either a rural location or it is a low-income urban. And the definition of urban extends to suburbs as well. So you'll see Chicago here. If you're in the whitish area, that whitish area of Chicago is most of the wealthier suburbs. Those suburbs, if you do EV charging, there is no credit at all. There's not a single credit if you're in that area. If you're in a yellowish area, a gray or a blue, and you'll see here, if you're in Lake Michigan there, and you're installing EV charging, you get a credit. I don't know why you'd be putting EV charging there. Maybe there's electric boats. But in the suburbs of our country seem to be the areas where there is no credit at all. There's not a single credit for EV charging in those non-low income suburbs. You have to be rural or urban low income.
Got it. Okay. Next slide. So let's go back. We've talked about these percentages. We're going to switch gears a little bit. So those are the maps. Go put your, exact addresses into these maps. You can slide them right in and you'll see kind of where you fall in all these shades. Thank you, Jacob, for walking us through all these maps. We're going to switch gears here because we talked about these percentages a bit, and I promised we were going to dig in more. So, let's say we're installing a ground source heat pump. It's under 1 megawatt in size. We go to the map, we figure out we're in an energy community. Yay, we're getting another 40%. But 40% of what, Jacob? Like, what is the eligible cost? And I want to specifically talk about ground source, since that's a little bit more complex than the solar, which kind of tends to come with its own contract and have a very obvious contract amount. Let's talk about ground source. What's eligible? 40% of what?
Yeah, so next slide. Ground source, it's unbelievable because ground source is one of the few technologies that not only the things that you typically consider ground source, but also the distribution of that energy. The distribution of that energy also is eligible for the tax credit. So, I speak at a lot of ground source conferences. There was a presenter before me. The name of their presentation was Worst to First. We've actually seen projects where ground source, including these tax incentives, was actually cheaper than conventional technology. And it's because of this aspect of not only that you can get a 30 or 40% credit, but on top of it, the distribution, that part, ductwork, air handlers, VAV boxes, diffusers, all that equipment that you'd have in almost any conventional system, the second it's connected to ground source, it magically becomes credit eligible, and you get that same 30 or 40% tax credit, or maybe even 50, as you'll hear shortly on our next presenter.
Great. And what happens with a hybrid system here to that point? So
yeah, great question. So let's define what hybrid means. Many ground source systems are not just pure ground source. There's usually some backup system. For example, a backup boiler that for very cold days provides heat energy. So those systems, when you have the backup system itself does not qualify. But as those are connected to the distribution, the ductwork, the air handler, the VAV boxes, the diffuser, as it's connected to all that internal stuff, now that equipment becomes what's called dual use equipment. It has energy flowing through it that comes from the ground sometimes and comes from the backup boiler. So based on that percentage, the ratio of annual energy flowing through that distribution on an annual basis, whatever that ratio is, as long as it's above 50%, then you get that ratio of the installed cost as credit eligible. So let's say it's 20% gas by the annual energy use and 80% ground, then 80% of your ductwork, your air handler, your VAV boxes, 80% of that cost, the installed cost, is credit eligible to get you that 30 or 40 or even up to 50% tax credit.
Got it. Anissa, I want to give you a chance to throw some stuff in here. I realize I should have stopped after the maps. Maybe are there questions that you think we should address?
We've had a lot, and I think, I just want to throw out there that if we don't address your question in session, we're collecting them and we'll try to do an FAQ afterwards. There have been some questions about, well, first of all, there was a question about the future of the credit. I know that's sort of supposition, but I want to address it because it has to do with whether people pursue this credit or not. So there's a question about, is there a chance that a change in administration would cut this program? People making decisions right now about whether to pursue. Is that something they need to be worried about? Is there, what are the dynamics around that people should be thinking about?
Yeah, I'd love to maybe take that one at the end and do a round robin from folks on that. Are there other ones related to some of this gnarly ground source stuff or the maps?
Yeah. Okay, so related to the adders, the low-income adder application, that opens every year, right? Just confirming that for people.
Yeah, it's going to be every year, and the belief it's going to be on or about this time of year, but it's every year. But you have to be under contract, but not yet completed.
Yes, so there was a question about that. So the under construction, not yet placed in service, generally speaking, is that after construction has started but not yet been completed, or is that usually earlier in the planning stages, like when they're under contract to design something?
It can be either. Either though, like if you have once again, this adder is just for solar and wind. So if you have a contract to do solar, they haven't started construction yet, that would meet the requirement. Or you could have a contract and they've started construction. The dangers there is, are you going to finish your project before the allocation happens? You have to finish your project after being allocated.
Great. One other question about the 1 megawatt. There were a lot of questions about the 1 megawatt thing, which I know you addressed sort of before, but just going back to that, the 1 megawatt is based on the consumption of power, or in terms of solar, is that on-site generation amount? Like what's the determination of what's 1 megawatt?
Great. That moves us to the next slide. So Annabelle, move us forward here. And let's have Jacob talk us through what is 1 megawatt. Go to the next slide.
One more.
Because, in solar land, we talk about watts. We talk about DC and AC, but ground source, we don't. So Jacob, what the heck is 1 megawatt? How do we understand 1 megawatt in these contexts?
Yeah, so on the solar side, it is AC. On the wind side, it's AC. It's on anything generating electricity, it's AC is your comparison for 1 megawatt. On something that's creating thermal energy, they've done a conversion, and you can do the same conversion. You can just type into Google, what is 1 megawatt in tons? What is 1 megawatt in million BTUs per hour? And the answer is 284 tons of cooling, or 3.4 million BTUs per hour heating. So if your project is below those numbers, then you're below 1 megawatt on a thermal project. And for a generating project, it's not your DC measurement, it's your AC measurement that determines whether you're under 1 megawatt or not.
Okay, so let's say I'm building a new school that will incorporate 220 tons of ground source heat pumps, so under the 284 number, and we're trying to go net zero, so we're going to install 500 kilowatts of solar. In that case, both are under 1 megawatt. So does that mean this project will start at a 30% base credit for each of those technologies?
Well, it depends. So first of all, the easiest way always to qualify is prevailing wage and apprenticeship. If you are helping labor in your area, paying prevailing wage, teaching those people new jobs for apprentices, that's the easiest way to qualify. You don't have to worry about if you're a megawatt or not a megawatt. You're paying prevailing wage and apprenticeship, you're at the 30%.
Great.
If for some reason that you can't pay prevailing wage and apprenticeship, then when you define 1 megawatt, and your question is very relevant, because there are 7 criteria to decide whether you have to add projects together or you get to keep them separate. And so the rule is, if any 2 of these 7 things are true, then you have to add the projects together. Notice that there's no criteria here that says it has to be the same technology. So it doesn't necessarily have to be solar plus solar. Solar might have to be added to ground source. There is nothing in the rule set that says ground source projects don't get added to solar projects when comparing 1 megawatt. So in your particular case, where on a single building, you're doing both solar and ground source, well, you're going to hit against the first box, which is contiguous pieces of land. You're going to be on the same piece of land. And so therefore, that's 1 of 2. If there's 1 more of these that are true, then you have to add those projects together. And more than likely, the one that comes up is the 6th one there, single master construction contract. Sometimes the 7th one there, financed under the same loan agreement. We often, in a project like you just described, I would say meet prevailing wage and apprenticeship. But if you can't do that, then in this particular case, you're going to have to add these things together.
Great. Okay, so this is all about understanding whether we're over under this 1 megawatt threshold, and understanding, again, with a goal of we want to maximize our credits, we want to serve up the most lovely meal to our guests. So my understanding, Jacob, is that we're still awaiting final guidance on Section 48. I saw, was it yesterday, we saw proposed guidance for 48E, right? This new tech agnostic credit that's coming. But in the meantime, this is the way we're interpreting this proposed guidance, and this is the way that projects are moving forward. Like, this shouldn't slow us down, right? We have proposed guidance and we're going with it. Is that right?
Yeah, you are allowed to base your understanding on proposed guidance, making decisions on the guidance that you have right now. Anecdotally, and you never can predict exactly when you're going to get guidance, but we're hearing in the grapevines that it could be November, December timeframe where the final guidance will come out for this particular topic.
Okay. Any other pieces I should have asked you about that I didn't? And I'll give you a chance to look over questions too. What else, Jacob, should I have asked you about that we didn't cover here?
So one of the things I've discovered recently, so this is probably new to lots of people here, is that things like number 3 on this list and number 4, those are for really big projects. Those are like wind turbines connecting to a substation that they created, connecting to an intertie. So in reality, as long as you're not doing a power purchase agreement, it's really just number 1, then the one with permits, then the one construction contract, and the loan one that schools would typically have to worry about. Substation is something that you're building on very big, like offshore wind type situations, and interties are kind of the same thing. It's those giant projects.
Got it. Okay. And you said, do you want to throw in any questions here in this moment?
No, let's keep the flow going.
Okay, great.
Thanks.
Thank you, Jacob. I really appreciate it. Mike, thank you for joining us.
Thanks for having
You're
me,
going to
Sarah.
talk about the ingredient called domestic content. This is a fun one, right? This is where we stimulate our domestic manufacturing for all these clean energy machines. Let's just start with the basics. What does the statute say? What is it for a project to meet domestic content? What do they need to do?
Right, right. So I think of this as the kind of Build America, Buy America side of the IRA. As we talked about early on, IRA is doing a lot more than accelerating green energy adoption. It really is. It's a jobs bill, it's a manufacturing bill, et cetera. This is really the domestic manufacturing side of the IRA. And it's relatively new. I mean, well, it's very new. It's still evolving. There's still a lot of guidance coming out. We actually just got a new piece of guidance the other day. So there's been some heartburn around it, to be honest. There is some uncertainty still around domestic content. It does kind of two big things. One, creates a bonus credit. Two, creates a penalty, potentially, right? So it kind of goes both ways. On the bonus credit side, it will take your credit up to a 10% adder. So if you're kind of at that 5 times multiplier through PWA, which we're going to cover next, I believe, you can get up to a 10% additional credit if you are meeting domestic content requirements. However, specifically on the elective or direct pay side, if you're not meeting domestic content, really beginning projects beginning construction 2024 and beyond, you actually can get dinged. So you can get your credit walked back to some extent if you're not meeting DC.
Great, Mike, we'll cover that in the next slide, but first let's just talk about the basics here. So we've got to do 100% domestic
100% steel, 100% structural steel and iron has to be sourced from the US. And then a specified percentage of quote unquote manufactured products have to be domestically sourced as well. As you can see there in the bullets you've got, that is a percentage that creeps up year over year, maxes out at 55% in 2027.
And so again, these years would be when I commence construction. So if I commence construction this year, in order to get domestic content, I need to have 40% of my manufactured products coming from sourced domestically. Yeah.
That's right. That's right.
What is a manufactured product? What is not a manufactured product?
That's not a terribly easy question to answer there. Fortunately, some of the guidance, one of the early notices does have a bit of a cheat sheet that you can use. It will break items down between steel and iron or manufactured product. The way I think it, if it's not structural steel or iron, it's probably a manufactured product. I'm being overly simplified there, but that's how I tend to think about it. Something like a control system, for example, for geothermal might be a manufactured product, right? You don't necessarily have to get down to nuts and bolts, but the larger items, components, subcomponents tend to be manufactured products for purposes of DC.
Okay. So, and you wanted to take us to this next piece. So this is kind of what it means to meet it. Let's go on to the next slide, Annabelle. What are the implications of not meeting it? So that's where you talked about kind of the stick piece here. So walk us through us again, because my brain was not moving as fast as yours was here.
Right. So beginning this year, construction projects beginning this year and beyond, you're going to get dinged potentially if you don't meet it. However, very important, 1 megawatt, which we just heard a lot about, is an exception here, right? So if you're under that 1 megawatt exception, this penalty, if you will, isn't necessarily going to apply. To Jacob's point, though, easiest way is to meet PWA and obviously meet DC if you can, but you do have a bit of an out in terms of having your credit walked back beginning in 2024 and beyond.
Okay, PWA, prevailing wage and apprenticeship, and we'll talk about that next. DC.
Yep, exactly.
Okay.
Yep. Now, it's also important to note there are a couple more exceptions to be aware of. So one of the notices that came out, I think it was 24-9, basically gave us an increased cost exception. So it says if the cost of sourcing domestic products is going to increase total project cost by more than 25%, then there is an exception to domestic content. Another one is lack of availability. So if there's a particular type of component or product that simply cannot be sourced in the US, there might be an out there as well. So there are some exceptions, but in general, you'll want to show domestic content, might have to show domestic content in 2024 and beyond.
Got it, right? Because if I don't, so I'm over 1 megawatt, I commence construction 2024. I don't meet domestic content. I'm only getting at 90% of my elective pay amount. So if I do all the math here and I was supposed to get $1 million, now I'm only getting 900,000, right? And we have this cliff where if we start construction 2026, we're over 1 megawatt, we don't meet domestic content, that number shrinks to 0%. So
Right.
we get no credit. So this is a big,
It's a big deal.
deal.
Yeah, it's a really important piece of the analysis to be aware of early on. And what we're seeing more and more of is that, especially school districts or governmental entities are writing it into the contracts, upfront, that the contractors are going to be sourcing US made steel and manufactured products.
Yeah.
I'm not sure if we had another slide coming up on domestic content, but just the other day we had even more guidance that came out. So it was notice 24-41, I believe it was, helped us a little bit. It gave us an elective safe harbor. So it basically says that you can use this menu, keeping with the chef theme, to find the ingredients and applicable cost percentages for domestic content purposes, right? However, and this is a big however, it only covers solar, I believe it's land-based wind, and then battery energy storage projects, right? Solar, it's very, very helpful, but also solar is a little challenging right now to meet domestic content just because so much of that supply chain is coming from abroad. But it does help quite a bit on the solar side. And then the other two categories, for most schools in particular, we're not seeing much wind. We are seeing some battery energy storage, so it can help there with this new elective safe harbor.
Okay.
That is certainly worth noting. We're trying to simplify things, which makes sense because this has caused a bit of consternation for both taxpayers and also the manufacturers that are being asked to field these requests and show cost data, because all of this is really based upon direct costs, material costs, labor costs. This could be viewed as very intrusive to the suppliers and manufacturers. So there's understandably been quite a bit of pushback.
Yeah. Yeah. And so what this, the recent guidance that you mentioned with kind of the safe harbors does is it says, for example, for a solar project, if you get your racking domestically, that we're going to say that's 7.1%. I'm making up numbers of the cost. If you get your panels, you get to count that for 30%. So it kind of obviates the need for manufacturers to reveal their prices. And, the DOE has kind of done the work for us to associate certain components with certain percentages. So you basically tick off, yep, I got those ingredients are domestic. That equals more than 40%. I'm good. Yeah.
Exactly right, Sarah. Yeah.
Okay. And so, and I've heard that there is some advocacy to get a similar table for ground source heat pumps. So
I would certainly advocate for it.
Yeah. So we have a restricted set now, but we're hoping that the DOE does more work, and I believe it's Department of Energy is doing that work to help the IRS release these tables for other technologies that are covered by these tax credits. Yeah,
I do believe that it will see that list expanding.
Okay. So we've we built out this table some more, and I'll let you jump in a sec. We built out this table some more to really reflect this, right? Again, if you're under 1 megawatt, there's no change for this domestic content piece. If you're over 1 megawatt, there is a change around the domestic content piece, depending on the year in which you commenced construction, going back to the very beginning kind of term of art. Yep. All right, Nisa, I'm sure we have unlocked a slew of questions. So I will let you jump in and hope that
very specific questions that I think. So
okay.
You did answer one of the questions about what's the percentage based off its cost. So that's helpful.
And hold on, because cost, this is the big kind of
with the table.
Cost. So let Mike talk about cost. What do we mean by cost?
Great.
Sure. The cost is the manufacturer's cost, right? And that's material costs, labor costs, essentially. And that's where we've had quite a bit of pushback from the suppliers, right? Because indirectly what you're showing is what your markup is. And they don't necessarily like that, right? So they don't want customers to look under the hood too much and see what their direct labor and material costs are. But that in general is what the cost buckets are when we're approving domestic content.
So then it's a percentage of what? So it's the manufacturer's cost is what you're looking at, and then
that feeds into the thresholds, right? So you start stacking up these different percentages to try to get to that currently 40%, or if it's steel, 100% manufactured product in the US. So you're taking kind of the cost from the manufacturer, kind of a two-step process. You take the cost from the manufacturer and then start stacking all the relevant manufacturers together, and kind of the denominator is total qualified project cost, and you're trying to meet that 40% threshold today.
And the qualifying project cost is the manufacturer's cost, not the cost that you are paying for the project.
I'm sorry, Nisa, say that again?
Did that make sense? So the denominator, as you said, is the qualifying project cost. So that qualifying project cost is the manufacturer's cost. It's not your contract cost. Is that what you're saying?
Well, the way I understand, and Jacob, you might step in here if you understand Tiffler. I think it's the total qualified project cost that from your vantage point.
Okay. Okay.
Jacob's talking. He's on mute though. I see him waving.
Talk with my hands.
Here.
There's two issues here. Your bonus credit is based off of installed cost, the full cost of the project install cost. To calculate the 40% or the 45%, that's a completely different calculation unrelated to what you apply the bonus to. That is just the denominator of that calculation is the overall manufacturer's cost for manufactured product. So, the labor to install the solar panels on your roof are not in that denominator. It's just the cost that the manufacturer of the solar panels or the manufacturer, that's the denominator. And the numerator is the domestic portion of that. Right. And that's where you're trying to be 40%. But when you eventually get your 10%, you're over 40, you qualify for the 10%, you apply that to your full installed cost.
Right. Yeah. And again, Anissa, what the safe harbor is doing is giving you those assigned percentages so you don't have to get the manufacturer's data.
Right, that was really helpful to understand.
If it's one of the systems that is currently provided for. And I should mention, by the way, one of the questions that I believe the notice specifically put out there was whether and what new technology should be included in the safe harbors. And no doubt, commentators are going to say, well, everything, in particular, geothermal.
Yeah, and the other question was from a manufacturer's perspective, and I'm sure we have a number of suppliers and manufacturers on the line. So I thought this was applicable here, which is what documentation the manufacturers need to provide or have on hand to show that their project is meeting these domestic content requirements. Do you guys know that?
Yeah, so there's a couple different ways to skin the cat. Sometimes spreadsheets are being provided. There is a certification that needs to be filed by the taxpayer claiming domestic content. So that part is kind of in the applicant's wingspan. But for the manufacturers, usually it's some sort of spreadsheet that is being filled out during the project or after the project. But I've seen several different variations of that spreadsheet. I don't know if there's one that IRS or DOE is saying you have to use this, but I've essentially seen some form of a spreadsheet where it's tracking the different products, components, etc. Ideally, you're getting some backup as well from the manufacturers, but that's where there's been some, hesitation to provide too much data to support the numbers in the spreadsheets.
Great. Yeah, and Sarah, I don't know if we want to address this here, but there have been a couple of questions about sort of the boundary around the project itself. So, for domestic content, do the domestic content requirements apply only to the products that relate to the energy property, or do they bleed out at all from there? And then the other place that question showed up was in the completion of the project.
Right.
So like put in, does the whole thing need to be put in service or just the energy property? So but both of those are sort of related, like what are the boundaries?
So domestic content in general, all of these rules for the most part look at project by project, meaning project is qualifying energy property. And we get this question quite a bit. well, if I'm building an entirely new school, do the windows have to be domestically sourced in order for the geothermal to potentially qualify? No, you're really just looking at the energy property specifically when it comes to domestic content. I believe also PWA, which we'll cover in more detail, but really the analysis, the focus is on the specific piece of energy property. But again, with geothermal, to Jacob's point earlier, it's pretty expansive, right? So you're not just looking at the piping in the wells, you might be looking at the air handlers, the control system. So it does, and that's where we're still, developing that kind of sample size is on the geothermal side, whether domestic content is going to be met. I think, we've seen some success, but I think the jury's still out as to whether it's going to be a, easy sell for domestic content on geothermal.
Got it. Great. Any other questions you want to throw in?
Not yet. We'll hang on to some of these.
Great. Okay, Mike, let's wrap this up. What are your big lessons, or what would you say to schools that want to pursue this domestic content? What are some of the best practices here that you're discovering as you're working with clients?
Get it in front of GCs, suppliers early on. If you can, contract for it, put it in the contract so it's a requirement from day one. And I think just having the open communication with the GC or the suppliers is really, really critical here. I think the good news though, Sarah, is this is now out in the water. All the manufacturers are getting this request. Early on, a year ago, a lot of our manufacturing clients were getting this question like, what the heck is this? What do I do with this? Right. Now it's, I think, sufficiently out in the water where they at least understand the request. But I think getting it on the radar very early on and getting it in contract documents is really, really going to be helpful long-term for domestic content.
Great. And is that something you are helping school clients do, kind of help them craft that language to get into those bid documents early on?
We are. Obviously, we're not a law firm, so we can't draft the contracts, but we are assisting in the review of the language and also helping to identify the relevant manufacturers. Again, back to geothermal, you might have 3, 4, 5, 6 different manufacturers that you need to get domestic certification reps from. So it's really good to know, especially early on, who are the different players that you're going to be getting requests out to for domestic content.
Great. And just like another example of why it's so helpful to have the professionals in early on in the process and, not wait until the guests are waiting for the meal. So thank you so much. Thanks for your expertise. Thanks for being here. We really appreciate the time that you've committed to this.
You bet. Thank you.
Great. Let's move on to Jesse from Baker Tilly to talk about PWA, prevailing wage and apprenticeship. So Jesse, thank you for being here. Thanks for the work that Baker Tilly is doing to support schools in this space. When I talk to schools about the IRA and how it contains provisions related to labor, I often hear, we're already paying prevailing wage, no big deal. What are schools missing when they say that?
Yeah, that's a great comment and question, Sarah. It's not just prevailing wage. It's not like any other project we've done before. Once we meet the requirements for prevailing wage and apprenticeship, we've got a plan for it because, again, that's the reason it's called prevailing wage and apprenticeship. We have some apprenticeship requirements. The slide here does a good job of talking through all those items. We have IRS guidance about how that needs to be calculated. One in particular, just for an example, we see if the contractor employs 4 or more individuals, they must have an apprentice. And working with a lot of our construction folks, that's certainly a new requirement they haven't dealt with before, they haven't planned before. So it's not anything to be scared of. It's just something we've got to work together as a team and prepare for appropriately. And if we do that, if we're fine. So in a way, if you hear the word, hey, this is just prevailing wage, we've done this before, that's actually a signal that, hey, we probably need to stop. We need to look at the prevailing wage and apprenticeship guidance for this IRA project and make sure we get lined up everything accordingly. Because on those previous charts we've seen, once we go over 1 megawatt, if we don't comply with this, we're going from 30 down to 6%, and that's hundreds of thousands or millions of dollars on these projects if we don't get it lined up accordingly. So again, nothing to be afraid of. It's just like any process, but because we have these new requirements, we've got to do proper planning and be prepared for this.
Got it. So pay prevailing wage and incorporate apprenticeships on the eligible equipment. So again, in the context of a new construction project for a whole school building with geothermal as part of it, where do the apprenticeships need to really lie there? Are we talking about help us understand again the kind of dimensions following on some of Anissa's questions earlier.
No, great question and comment, again, from the planning purposes. Obviously, K-12 school districts, you're doing several millions of dollars of capital improvements, roofs, parking lots. And so to Sarah's point, we really need to isolate what's called the energy project, or we've talked about energy property during this time. So if we're building a new school and we're over 1 megawatt, it's the geothermal system that is subject to these rules. That's going to be subject to the prevailing wage and apprenticeship rules. So what I've been seeing in a lot of the clients that we're working with in the K-12 space is how do we plan for that? If we have a large bid package, where we've talked about doing new high schools, how do we isolate that project properly? Okay, can we bid that geothermal system individually? Can we find out how many contractors will be on there? How do we plan properly to just take that one project and make sure it's complying with these, and so it doesn't affect the rest of the project, makes it easier for our cost segregation study and tax filing later down the road. So again, just to reiterate what Sarah was pointing at, only the energy project, or what we're going for the IRA tax credit on, has to follow these rules.
Yeah. So the Department of Labor didn't issue guidance on prevailing wage and apprenticeship until late January 2023. So that is one of the exceptions, right? For folks who are kind of on the bubble here. Can you just make clear that exclusion around the start date, the commenced construction date?
Certainly, and it's on the slide, which is a good point. So let's say you had a project and you started construction, and we talked about that a little bit earlier, and it was in 2022, and you were over 1 megawatt. Well, in that case, you could get an exemption from these prevailing wage and apprenticeship rules for that type of project. And then also the other exemption is the under 1 megawatt that we talked about earlier. Again, it's kind of the common theme. We're saying work with your tax professional, plan ahead. We kind of talked about that 7-question test. If we're doing solar or geothermal, we just got to have those discussions. And if we can hit those 2 exceptions, well, that reduces our tax requirement options. If we're going to be over it, we've got to start planning for it. The other big point I want to bring into this real quick is that you, the school district, are the tax filer. So I've had a lot of discussions, or, my construction manager is going to take care of that, my contractor, well, we've got to remember, you, the school district, are the tax filer. So you are the ultimate one who's responsible for complying with this item. It doesn't mean that it's not a team game and you shouldn't have your construction manager, contractor, your tax professional guiding and informing and bringing people through it. But at the end of the day, you're going to be the tax filer and putting these documents together. So it's a team effort, but we've also got to understand, once we're subject to prevailing wage and apprenticeship, we, the school district, are ultimately responsible for complying with that system, and we've got to have a plan in place.
Great. Let's go to the next slide, Annabelle, because I think that's, Jesse's teeing up a great point here, which is this is really about creating the systems and helping our contractors to comply with this and making it administratively easy. So talked about kind of what that has looked like as you have started to help school clients navigate this.
Perfect. So at the beginning, again, we're looking at a solar project, we're looking at geothermal, and we're over 1 megawatt and we're subject to these requirements. So it's always good to have a meeting and say, hey, we're over 1 megawatt, we're going for an IRA tax credit, and there's some decisions or discussions we've got to have on that. The first item is when we go out to bid for this project, we've got to have the proper bidding language, letting know all of our contractors, anyone bidding on that we are going for an IRA tax credit. We are going to be subject to these rules. And it's very important to have that disclosure up front. Everyone bidding on the project's aware of it. And so when those team members joined the team, they were educated up front and aware of it. Also, we talked a little bit earlier, can we isolate that bid package? Can we take the energy property and isolate as much as far as the cost center, who's going to be working on it? If we're able to do that in advance and isolate it and put our bid language in, we're going to be off to a great start in complying with this when we begin our project.
Yep.
So then once construction starts, we've got to be reviewing that payroll real time. We've got to have the records of all the individuals that were on that job. We've got to know what they were paid weekly or bi-weekly. We've got to match that hit the prevailing wage requirements. And then we're also got to match up that they're following the apprenticeship requirements. So there's a lot of action that's taking place during construction about making sure that data is coming in. and it's lining up accordingly. You can see at the bottom of our chart, you know, for some reason that we find out an employee wasn't paid correctly, if we identify it quickly, we can get that employee paid correctly, we can get rid of that item. In the unfortunate event that, you know, for some reason we didn't comply, then we've got to calculate our penalties and interest and have all of that taken care of by the time we're going to do our tax file.
Got it.
Then the last section on the right, when we go to actually file our tax credit, just like any taxes, we've got to have all the payroll records, all those individuals matching up if they were paid correctly, follow the apprenticeship rules. We've got to have all of that backup ready to go for when we do our tax filing and put that together. So what we're doing at Baker Tilly is we have a software package where contractors are able to upload their payroll into the system. It runs it through the tax rules, and then we're tracking these projects real time in order to cure those penalties on the back end. So it's kind of a recurring theme. We keep saying it over and over again, but the sooner you get ahead of it, the sooner you plan, hey, here's our project. We've got the bidding language. We've got our compliance system set up. We're going to be just fine. It's only if we get halfway through, we find out, oh my gosh, over 1 megawatt. Oh my gosh, the contractor didn't have the right wage rates. These are the types of things that can derail us or potentially jeopardize that credit. And we want to avoid those situations.
Great. I'm picturing the kitchen right now and realizing we're out of garlic or whatever, you know, the ingredients have gone awry. So let's get all that sorted out. Okay, wonderful. Let's move over. So this was great on prevailing wage apprenticeship. I hope that's helpful. Let's move over here to another piece that you're going to help us with, because I know your background is in municipal finance, you know, and that's kind of the financing side of the story, which we haven't talked a lot about, but is super important here. We know that schools often pull together multiple different sources of funding. You know, Clark talked about it early on. And we braid all these different sources of funding together to make a project happen. So let's talk about how some of these other sources of funding that aren't tax credits kind of impact the tax credit story and how we can navigate that. So tax-exempt financing, right? This is like bread and butter for a lot of school construction projects. We go out in the bond market, we raise tax-exempt debt to pay for our new school. How does the use of that type of funding impact the value of our tax credits?
Yeah, no, another great comment is, you know, we kind of talked about that domestic content reduction factor that earlier. So the use of tax exempt bonds will also reduce the credit by 15%. So if we're going to build the solar field, we use a tax exempt bond issue, which is very common and a great financing tool for K-12 school districts across this country. It's going to reduce the credit by 15%. And you can see there's a little bit of an illustration shown in the middle of the page. So knowing that, and knowing we have multiple sources available, again, the recurring theme of planning ahead, if we're able to look at our different pots of money that we have available to do our big capital improvement plan and our energy projects, we can be strategic at how we approach that. So let's say we've got some cash on hand from a capital improvement fund, and we have bond proceeds from a tax exempt bond issue. Well, obviously, we want to do the solar project out of the cash on hand so that we can avoid that 15% tax credit reduction. So kind of a big project or that we're seeing also is we have a large capital improvement plan. Here's our energy projects. Here's our funding sources that are available. How do we properly put these two things together to maximize that tax credit? Because you can imagine it would be horrible and inadvertent as we use tax exempt bond issues to do the solar field, and that wasn't necessary. And as a result, we lose 15% of our tax credit, where if we just done some planning and paid the solar field out of some cash on hands, we could have avoided that. So, you know, just planning ahead and also looking at your sources of funds is going to go a long way in maximizing your tax credits.
Great. Okay, let's move on to grants. You know, we started the session, we're being hosted here by, you know, Department of Energy that has a grant program, a whole separate thing, right? New America Schools grant. Let's talk about how grants fit in here. I've heard this phrase, no excess benefit. Jesse, walk us through what no excess benefit means.
So no excess benefit is saying that if we have grants or restricted funds and the tax credit cannot exceed the value or the purchase of the asset of the project. Sarah, to your point, where we're seeing this is these wonderful state and federal programs that are helping schools purchase a lot of electric buses. We've been filing a lot of those tax credits and working on that. When doing that, again, we've just got to take a look at, well, here's the grant. Here's the tax credit we're going for. We got to make sure that does not exceed the purchase of the asset. If it does, we can just apply for a lower tax credit, still get, take advantage of the grant program and also the tax credit. We just can't make sure it exceeds it. So when looking at that, again, talking about our funding sources or our sources, we've got to look and see if we're using grant funds, if they're restricted, if they're going to hit this calculation, and then just do it appropriately. And then you can see on the slide, we've got some nice, simple mathematical illustrations to show, okay, if I run into this situation, what does that mean? And how do I do that appropriately? So again, it's amazing. It's a fantastic program, but as long as we plan appropriately and we work with our professionals, it's going to be fine. But you can see how many different triggers can really change our dollar amounts depending on how the different situations we run into.
Yeah, great. Okay. So I'm going to take a stab at Anissa's question on, the kind of longevity and the resilience of this as a policy for folks. You all can be thinking about how you might add on our professionals here, right? Because I'm just the amateur. And then Anissa, see if there are any other questions that you want to throw in here, because then I'm going to hand it over, back to Kate in about 5 minutes. So we've got 5 minutes to do some last questions and a round robin on the political piece. So we get this question all the time, right? Oh, Washington, who knows, right? And I want to be really clear about this, that the Inflation Reduction Act is law. It is not it is not subject to annual appropriations. It's not something that a new administration could just come in and decide to do differently, right? It is law. It would take new action by Congress to change that law. The other thing I'll say is that these tax credits that we've been talking about, in particular Section 48, that has been around for a while. It is what we have used to build the solar and wind industries in this country. So it was started back in 2008, and it has been extended by both Republican and Democratic administrations and Congresses. So this is a policy that has a lot of support across the country because we have a lot of clean energy in red states and in blue states. President Trump himself extended these tax credits in a COVID relief package in December before. So we've had a lot of this policy has been tested politically, extensively. So that's one thing I'll offer there. Do any of you professionals want to offer or add on to kind of your perspective on the resilience of this as a policy and schools' ability to kind of make plans for it?
I guess what I would add is when you're not in power, it's very easy to rattle your sabers about something. But when you come in power, if you're actually going to change something, you have to face the electorate. And so Georgia, Oklahoma, New Mexico, Arizona, they all have $1 billion solar fabs being built there to drive the solar domestic industry. Those senators and Congress people will need to answer to those employees that just got new jobs out of this. So it's a lot harder when you're in power to change something than just to rattle your sabers when you know you can't actually make a change. So I guess that's the only thing I'd add.
Great.
Sarah, I'll throw in a comment or two here. We get this question almost every time we're chatting with a client or prospect, and it's a valid question. How do I know this is going to be around next year, especially with a potential change in administration? Fair question, especially when we're talking about baking this into your capital planning process. Does it make sense to go through those, to those lengths, given this could be overturned? And I always answer, it's tax law. It's subject to change. It's always subject to change. But I think this bill is on pretty stable ground now. There was some, pushback early on. But when you look at it geopolitically, it's benefiting red and blue states alike. So we are very clear and crisp with the message. Plan for it. We're pretty bullish on this legislation. We think it's going to be around. We think it should be in your planning process.
Great. And is there one last question you want to throw in before we turn it back over to Kate to close us out?
A lot of the questions are pretty technical, so like bring us back into the weeds. So
Okay.
I don't want to, but we should answer them. We should try to answer them offline. There
Great.
was a question that's a little bit of a softball for the people here, but it's probably very important for everyone on the line to know, which is, are there any restrictions on the funding coming back to you through this tax credit? Is it just your money, or is there anything that you need to know about that money?
Jesse, this is one that you and I talked about, and I should have asked you in your section. So please, proceeds. Clark talked about big dollars. What's going to happen when Clark gets those dollars? Does the IRS have something to say about it?
No, what we've been seeing is, obviously this is federal legislation. You've seen the system. You're going to get the money. What we've been talking to clients or advising is, especially if you're doing a tax-exempt bond issue, to talk to your bond attorney. State law on voted referendum bond issues may have different requirements. They may be putting those together. We've had some discussions about maybe that has to go to the debt retirement fund. I've been on calls with other attorneys that say, hey, put it in the general fund or fund other improvements. I think obviously as school districts, we would like it to be unrestricted and do more improvements and do more energy projects. But what we think the best move is to talk to your bond attorney or talk to your attorney, get that nice email back to see what that's going to be doing. And then you've got that documentation. And also it's a good planning tool, right? I'm going to build this solar field. I've got $300,000 coming in. I've got the email from my attorney, and when that money comes in, we're going to do X with it. Just another part of the planning process. But we think because we're seeing so many different answers state by state, it would be good to check with your attorney on that.
Yeah, great. Anissa, I love that question because it really points to the opportunity for us to keep recycling these dollars in a kind of clean energy revolving fund for our schools, right? We get these proceeds back and everyone's excited about doing the next project to generate the next credit. So I think it points to just the whole world of opportunity in front of us for the next decade. So thank you all to our chefs. Thank you, Anissa, for helping to pull in the right strands here. I'm excited to see, what we all do with this. And Kate, we'll turn it back over to you, our host. Thank you so much for having us.
Such a great conversation. Sarah Ross, thank you. And to Undaunted K12 for being an advocate for schools, willing to pull together this important information. It's complex, but also with this conversation, you've made it really accessible. And thank you for your efforts on this. And thanks also to Clark for sharing a really concrete example of what's possible. And of course, big thanks to Colette and Oprah, Jacob and Mike, Jesse, you guys, so helpful in unpacking this critical information about funding for schools that is available now to take advantage of. So we do have those resources available also through Department of Energy. As we've mentioned, Renew America Schools has another round of funding, and that application deadline is June 13th. If you're an industry expert or also a school representing a school district, consider joining Renew America Schools teaming partner list. We are pulling together, if you just access that QR code, we're pulling together contact information for key partners. If you remember what Clark's big message for us, find the right partners for your project. You don't have to do this alone. And join our teaming list and review our teaming list to see who's available to help your school district succeed with pursuing these tax credits. We also want to highlight another program within DOE is the Efficient and Healthy Schools program. They also are an interagency effort between DOE, the EPA, and the Department of Education to ensure that our country schools are well supported with technical assistance, seeking to implement high impact indoor air quality and efficiency improvements. So make sure to check out Efficient and Healthy Schools program. And also want to highlight the DOE Loan Programs Office. You'll find some other funding opportunities and educational opportunities as you continue to learn more about how these funds can strengthen and support your school's clean energy goals. I'm going to say it again, June 13th. Get your application in for Renew America Schools. As we said, it's going to start out with phase 1 is going to be a prize, and then phase 2 and 3 involve cooperative grant agreements. It's going to be good money to help you pursue your clean energy goals as a school and school district. We look forward to seeing some really strong applications come through, and you can see that the link is there as well as the QR code. Make sure you sign up for updates with the Renew America Schools so you can learn about the other webinars we have coming throughout the summer and fall as well. We hope you'll stay in touch. Let us know how your projects are coming along, how the partnerships are forming. The best way for us to support one another is to share these resources and to share our successes as well as our challenges so we can learn together from one another as together we advance a clean energy economy for all. Thanks, everyone.